I'm going to give you some pretty good information. What I'd like you to do at the end of the video is to subscribe to my channel and give me a thumbs up. And if you're looking to get more information in the future after you subscribe, click on that little bell to the right side of the subscribe button. As my new videos come out, you'll be notified. So you're wondering whether or not it's worth it to buy a house. Gee, you have money in the bank and you're afraid to take it out because you put that money down on the house, it's going to deplete your savings. Well, let me say this. It's the best investment you can make in your life. It's the best nest egg you can have in your life. I want you to think about something. Say you had $100,000 in the bank, just for argument's sake. Let's use that as an example. $100,000 in the bank, and your interest rate is going to be just under or just over 2% in this time, in this day and age. Okay, what do you do with that? At the end of the year, maybe you get an extra $2,000. Well, if you wind up buying a house and you put that $100,000 down on the house, let's just say you're putting down 25%, and the house is going to be $400,000. Now, if you put your $100,000 down on this house and you buy the house, you got the $400,000 house, and a year from now, that house increases in value by 2%. Now, the 2% that you put in the bank gives you $2,000 because that's on $100,000. The $100,000 that you put down on the house is not what you're getting the 2% on. You're getting the 2% on a $400,000, the value of the home. So now, instead of getting $2,000, you're going to get 4 times 2, $8,000. Now, the $8,000 is a real value. If you were to sell the house in a year, you'd have an extra $8,000. Of course, you got closing fees and everything else, but we're going to disregard that for the moment. What we're looking at is long-term investment. If you take that investment and you bring it up to the 2-year mark, the next year it's going to be 2% on $408,000. But homes traditionally have gone up throughout the years. You can't go by 1 year or 2 years. What you have to do is you have to go by a period of time. In a period of time, it will go up more than the 2%. Some years it'll go up 2%. Some years it might go up 5%. You're up 5% on $400,000. It's a $20,000 increase. So, generally speaking, the investment is really worth it. If you look at investing in the stock market, yeah, you could probably get 4% on some investments. But don't forget, the stock market is a risk. It's a horse race. You don't know what's going to happen. Just think about this. They're not building any more land. Property values will always go up. They've gone up since, well, you can look back since the 1900s, early 1900s, and look and see the graph charts of the values going all the way up from that period of time. Now, that's not the only consideration. What you have to think about is this. Are you renting? All of that money that you're putting into rent is going out the window. You have nothing to show for it after you've spent all that money years and years and years. Now, if you were to take all that money and put it into a house, you are building equity. You have no equity when you rent. All you have is receipts that you paid your rent. Here's what I suggest you do. Go online and look for a rent versus buy analysis. Now, if you plug in all your numbers in there, what you're paying for rent, and then plug in the numbers that you would do for a house, you'll see the difference of what you're going to save over the years. It's a tremendous amount. So there's no contest at all between rent versus buy. What you have to do is put your mind to it and say, okay, buying a house is definitely a good deal. It's something that I should do. And by gosh, get that money together and buy a house. Just so that you know, and to be fair with you, there are times when prices on homes can go down. But to be honest with you, it doesn't happen that often. And it did happen in 2008. There was a big housing crisis. That's because a lot of people were getting loans that should not have gotten loans. Those people were loaning on what they call subprime rates. Now, I don't want to get into all this business about subprime rates and everything else, but to let you know, a lot of people couldn't afford the houses because they got adjustable rate loans, and their mortgage payments were low at the beginning with a low rate, and the rates went up, and they couldn't afford it. They had to go for loan modifications. Eventually, some of them, they were foreclosed on. But this is an unusual situation where it was a perfect storm with the banks and the government and the lending institutions. Theoretically, you don't have to worry about that anymore because they've changed all the laws. So the whole point of this story is make sure that you can afford to buy a home before you do. There is such a thing called lease purchase. Lease purchase is a very different animal. It's something where you make a deal with the homeowner, the current homeowner, that you are going to lease the home, and you're going to pay them rent, and part of that rent is going to go towards a down payment on a house that you're going to purchase. So you're actually entering into a contract to purchase the home. Usually how it's set up is that at the end of a certain period, maybe 2 years, 3 years, whatever everybody agrees upon, the home has to be purchased. And you must purchase it, or you lose the money that you've been paying towards the down payment. And how that works is the current homeowner has to agree, of course. It could be 70% goes towards rent, 30% will go towards the savings, towards the mortgage. That would be put into a special account. And it could be 50-50. It all depends on what everybody agrees upon. And then when you reach the end of the time, you have to purchase the home. If you don't purchase the home, you could lose that down payment. But if they don't need the sale of their home and they have enough money to buy a new home without selling the one they're currently in, you may be able to make that deal. Now, in a lease purchase, there's a risk at both ends. What I mean by that is that if the price of the house goes up over a 2 or 3 year period, if it went up 5, 6, 7%, the homeowner is locked into the sale price. If it goes down in price, you're locked in to the sale price as well. So it's slight risk, but usually what happens is that the price does go up some, but the fact that if you don't buy the house, the homeowner gets the down payment, that's part of the consideration for the benefit of the homeowner for taking that risk. But in the end, the homeowner has a guaranteed sale. Of course, everything can be changed. Things can be modified. It can be rearranged. If you need an extra year and the homeowner agrees to it, you get it down in writing, it can be done. So it's just another thought on how you can wind up purchasing a home if you don't have enough cash available and you do get the homeowner to agree upon it. It depends upon the homeowner's financial position, whether they can rent the house to you. If they can't, they may be looking to go out to purchase something at the other end, and they need the sale of their home to do it. It's not going to work out. So it's just something to think about. Now, if you don't have enough money to buy a house, you could buy a co-op or a condo. That's a good, viable alternative. A lot of people use that as a step up. To buy a condo or a co-op, which is usually cheaper than a house, and over a period of time, that will gain in equity. And when you sell it, you'll have enough money to put down on a house. So buying property, buying a condo, buying a co-op, this is the American dream. Actually, it's everybody's dream, no matter where you live. To own property, to own something, to have something. So in the end of this analysis, is it worth buying a house? You bet it is. Best thing you could do. Go out and buy one now. I know there are pros and cons to renting, and you're going to hear people say you can take that extra money that you would spend on a house for repairs and everything else throughout the years and put that money into an investment and make out better in the end. But it's my experience that what happens is that you never wind up saving that money. You always wind up spending it. So having a house is basically a forced savings. So in my opinion, I think buying a house is better than renting. Now don't forget to hit that red subscribe button below the video. By subscribing to my channel, you'll have information on many new tutorials on many different subjects. So don't forget, hit that subscribe button.